and welcome to another video in the section of partnership accounting or accounting for partnership. In today's video, we will talk about goodwill, its concept and valuation. Before we go deep in the subject and understand the various ways of calculating goodwill, let's try and understand what is meaning of goodwill. We can say goodwill means the good name or the reputation earned by a firm through the hard work and honesty of its owners. If a firm renders good service to the customers who feel satisfied will come again and again, and the firm will be able to earn more profits in future. Thus, goodwill is the value of the reputation of a firm which enables it to earn higher profits in comparison to the normal profits earned by other firms in the same trade. Hence, we can say goodwill is nothing but a good name or a reputation enjoyed by the firm. And this good name or good reputation enjoyed by the firm in the market enables it to earn profits at a higher rate as compared to its competitors in the same trade or in the same line of business. Let's look at some of the common definitions of goodwill shared by different scholars. The first one is by Lord Lindley, which states that the term goodwill is generally used to denote the benefit arising from connections and reputation. Whereas Lord Eldon defined goodwill as nothing more than the probability that old customers will restore to the old place. Whereas Spencer and Pagler defined goodwill as goodwill can be said to be that element arising from the reputation, connections, or other advantage possessed by a business which enables it to earn great profits. Then the return normally to be expected on a capital represented by the net tangible assets employed in the business. Here, in this definition, the emphasis is laid on the net tangible assets employed in the business and the expected rate of return. That means by employing rupees 1 lakh, if the normal rate of return is 10,000, then the business should be earning 10,000 rupees per annum. But if by employing rupees 1 lakh and the business is able to generate returns up to 12,000, then the extra 2,000 that the business is earning is purely basis of its goodwill. Let's move on and let's look at some of the features of goodwill. First, goodwill is an intangible asset, means it does not have a physical existence. It's a valuable asset because though it don't have a tangible value or it cannot be touched, felt or seen, it don't have a physical existence, but it enables the business to earn profits at a higher rate. That's why it's a valuable asset. Helpful in earning excess profit. Value is liable to constant fluctuations. We know normally the assets are depreciated with the passage of time. But goodwill, even though it's an asset, but its value constantly keeps on fluctuating. That means whenever the value of goodwill is calculated, depending on the current circumstances prevailing at that point in time, the value may go up or may fall down. The value of goodwill is applicable only when the entire business is sold. The business owns a car or say a building or a machinery. The business may sell out the asset and still can continue its operations, whereas goodwill of a business can't be sold out separately. So the value of goodwill is effective only when the entire business is sold out. It is difficult to place an exact value on goodwill. Reason being, there are different ways or methods of calculating goodwill. So, the value calculated using one method can be different if we follow a different method of calculating the goodwill. Hence, putting an exact value to goodwill is a difficult task. Now, let's move on and look at nature of goodwill. Goodwill is an intangible asset. Goodwill is non-fictitious asset. And lastly, goodwill can be sold along with the sale of business only. On this slide, we will discuss about factors affecting the value of goodwill. The first one is favorable location of the business. So where the business is located helps or plays a great role in determining the goodwill of the business. Efficiency of management. At times, the top management or the people who are managing the business also plays a critical role in deciding the goodwill of the business. Longevity of business, for how long the business is in operation. The older the business entity is, higher the value of goodwill is. So the new business firms don't enjoy goodwill at goodwill at par as compared to those business entities which are older in the trade or older in operation. Nature of goods, possession of license, monopolistic and other rights, risk involved, trend of profits, future competition, capital required, and other factors like political stability, government regulations. So these are some of the key factors which helps in ascertaining the value of goodwill, or these are the factors which affects the goodwill of any business entity. If we talk about classification of goodwill, the goodwill can be classified broadly into two categories, that is purchased goodwill or self-generated or inherited goodwill. Now, we will talk about when goodwill is calculated. Normally, the goodwill is calculated at the time of admission of a new partner or at the time of death or retirement of a partner, when there is a change in the profit sharing ratio among the partners, if the goodwill is sold at the time of dissolution of the firm, or lastly, when the firm is amalgamated with another firm. So these are the 5 different scenarios when the need of calculating goodwill arises. On this slide, we will talk about the various methods of calculating goodwill. So the various methods of calculating goodwill is, first one is average profit method. Second one is super profit method. The third one is capitalization method. And in capitalization method, we have two classifications or two subcategories. That is capitalization of super profit method or capitalization of average profit method. On the following slides, we will discuss in detail about all these 4 different methods of calculating goodwill. So let's begin with average profit method. This is the very simple and widely followed method of valuation of goodwill. In this method, Goodwill is calculated on the basis of the number of past year profits. Average of such profits is multiplied by the agreed number of years. And this agreed number of years is referred as years of purchase. And such years can be 2, 3, whatever, depending on the agreement between the partners. The formula for calculating goodwill as per the average profit method is value of goodwill is equals to average profit multiplied by number of years of purchase. The average profit is calculated by taking the total of profits for the years in consideration divided by number of years in consideration. Number of purchase years is the agreed number of purchase years, and which is normally given in the question very clearly. Now, let's look at the steps of calculating average profit method, goodwill by average profit method. So the steps are: find the total of profits of the required number of years. So if the partners agreed that we will calculate the goodwill basis the last profits for last 5 years or 4 years or 3 years, whatever the number is. So first of all, you need to calculate the total of, if the profits for last 5 years is to be considered, then you will add up the profits earned in the previous 5 years. If the profits for 4 years is to be considered, then you will do the total of profits for last 4 years. Then divide the total of profit by the specified number of years and find the average profit. So if you have taken the profits for 5 years in consideration, then you will divide the total by 5. If you have considered 4 years of profit, then you will divide the total by 4. And then whatever the average profit is calculated, that will be multiplied by number of specified number of years, or that is number of years of purchase, and that's how you will reach on to the amount of goodwill. Here we have presented an example. So the example says calculate goodwill for the firm basis 3 years purchase of the average profits for last 5 years. The profits for the last 5 years were year 2013-14 4 lakh profit, 2014-15 5 lakh profit, whereas in the year 2015-16 there was a loss of 60,000. Then again in year 16-17 there was a profit of 1,50,000. For 17-18 the profit was of 2,50,000. So now let's see how to solve this. So first of all, what we will do is we will calculate the average profit. So to calculate the average profit, we will add up the profits of different years. So the profit is coming out to be 12,40,000, and we will divide this 12,40,000 by 5 because we are considering the profits for last 5 years. So once we divide 12,40,000 by 5, the average profit will come out to 2,48,000. And in order to calculate goodwill, we will multiply 2,48,000 by 3, because in question it is given that we will be taking 3 years purchase. That's why we have multiplied it by 3. If this 3 would have been 2, we would have multiplied it by 2, or if it would have been 4, we would have multiplied it by 4. There is another method which is known as weighted average profit method. This method is modified version of average profit method. As per this method, each year's profit is assigned a weight. The highest weight is attached to the profit of the most recent year. And the formula to calculate amount of goodwill as per weighted average profit method is Value of goodwill is equals to weighted average profit multiplied by number of years of purchase. Weighted average profit equals to total of products of profit multiplied by total of weights. Total of weights is equal to sum of weight assigned to the years in consideration. And product of profits is equal to profit of the year multiplied by assigned weight to the year. In this method, each year is assigned a weight and the highest weight is attached to the profit of the most recent year. So this is something worth noting. Now, if we talk about steps, so first, take the profits of the last years, which uh, you need for your calculation, multiply each year's profit by its weight and find out the product. Adding the products of all the given years and ascertain the total of products. Find the total of weights. Divide the total of products by the total of weights to get the average weighted average profit. And then finally, multiply the weighted average profit by the specified number of times, which is number of years of purchase, and get the amount of goodwill. Here, let's look at this example. At the time of reconstruction of a partnership firm, goodwill was to be valued on the basis of 3 years purchase of weighted average profits for last 4 years. The profits and losses for preceding 4 years were: for year 2013-14 it was 22,000, for 14-15 it was 27,000, for 15-16 it was 32,000, and for 16-17 it was 35,000. So now let's look at the solution. So in the weighted average profit method for calculating goodwill, a weight is assigned to the profits and the highest weight is assigned to the most recent year. So here you can see that the weights are assigned as 1, 2, 3, 4. So the year 2016-17 is the most recent year. That's why the highest weight, that is 4, is assigned to this. And the year 2013-14 is the oldest year. That's why the least weight, that is 1, is assigned to this. So in order to calculate the product, we will multiply the profit by weight. So 22 multiplied by 1 equals to 22,000. 27,000 multiplied by 2 is equal to 54,000. 32,000 multiplied by 3 is equal to 96,000. And 35,000 multiplied by 4 is equal to 1,40,000. So now we have products in place. In the next step, what we will do is we will do the sum of products, which is coming out to be 3,12,000. Then in order to calculate the average, we will not divide 3,12,000 by 4, as we are taking profits for 4 years in consideration. What we will do is we will divide 3,12,000 by the sum of weight. So here the sum of weight is coming out to be 10. So in order to calculate the weighted average profit, we will divide 3,12,000 by 10. So that will come out to be 31,200. And to calculate the goodwill, we will multiply 31,200 by 3. The value of goodwill will be 93,600. And why we have multiplied it by 3? Because in the question it is given that we need to calculate the profit basis 3 years of purchase. Let's move on. The next method is super profit method. In this method, goodwill is calculated on the basis of surplus or excess profits earned by a firm in comparison to the average profits earned by other firms. If a business has no anticipated excess earnings, it will have no goodwill as per super profit method of calculating goodwill. Such excess profits are called surplus profits or super profits, and the goodwill is calculated on the basis of super profit. As earlier I explained it to you, if the normal rate of return in a particular industry is 10%, that means the firm will earn rupees 10,000 by employing rupees 1 lakh as capital. But if the firm is earning 12,000 as profit by earning rupees 1 lakh, that means the excess of 2,000 that the firm is earning is its super profit. And we will use that 2,000 as the basis for calculating the value of goodwill in this method. So the formula for calculating super profit is, first we will calculate the normal profit, and for calculating normal profit, we multiply the capital invested by normal rate of return and divide it by 100. And to calculate super profit, we deduct normal profit from the actual or average profit. And goodwill will be equals to super profit multiplied by number of years purchased. If we talk about steps, first calculate the actual average profit by adding the profits and losses of the given year. Then calculate the normal profit by multiplying capital employed divided by invested by the normal rate of return divided by 100. Then calculate the super profit by deducting the normal profit from the actual average profit. And finally, by multiplying the super profit by a specified number of times, that is number of years of purchase, and get the amount of goodwill. Let's see an example. A firm earned net profits during the last 7 years as follows. So for year 2009, it was a profit of 20,000. For year 2010, they suffered a loss of 70,000. And in year 2011, they again suffered a loss of 40,000. But from year 2012 onwards, they started earning profit, which was 2,50,000, 2,70,000, 3 lakh, and 3,20,000. The capital invested in this firm is 12 lakh. The normal rate of return in similar type of business is 10%. And you need to calculate the value of goodwill on the basis of 2.5 years purchase of average super profit earned during the above mentioned 7 years. So let's look at the solution. So first what we did, we calculated actual average profit. So in order to calculate the actual average profit, what we did was we added the profit for those 5 years in which the firm earned profit, and we deducted the loss suffered by the firm in the 2 years. So the total was 10,50,000 that firm has earned as profit, and in order to calculate the average, we will divide it by 7, because we are considering the profits and losses incurred by the firm or earned by the firm during last 7 years, and the average comes out to be 1,50,000. So this is our actual average profit. Now we will calculate the normal profit. So capital invested multiplied by normal rate of return divided by 100. So the capital invested we know is 12,000. The normal rate of return is 10%. So putting those values in formula will give us result as 1,20,000. So now we know that actual average profit is rupees 1,50,000 and normal profit is 1,20,000. Now we will calculate the super profit, and in order to calculate the super profit, what we will do is we will deduct the normal profit from actual or average profit. That means 1,50,000 minus 1,20,000. So the result we are getting is rupees 30,000. So rupees 30,000 is the super profit earned by this firm. And finally, to calculate the value of goodwill, we will multiply the super profit by the number of purchases year. So we know the super profit is rupees 30,000 and we will multiply it by 2.5 because in question it is given that the number of years purchased is 2.5. So the value of goodwill will be rupees 75,000. Let's move on and look at capitalization of average profit method. In this method, first of all, we calculate the average profits and then we assess the capital needed for earning such average profits on the basis of normal rate of return. Such capital is also called capitalized value of average profits. Goodwill is calculated by deducting the actual capital employed in the business from the capitalized value of average profit. And the formula for calculating is capitalized value of average profits is equal to average profits multiplied by 100 divided by normal rate of return. And the goodwill will be capitalized value of average profits minus net assets. If we talk about steps, so first calculate the capitalized value of average profits by multiplying actual average profits by 100 and dividing the product by normal rate of return. Calculate the capital employed by deducting the liabilities from assets. And finally, calculate the amount of goodwill by deducting value of net assets from capitalized value of average profits. Let's look at it an example. From the following figures given below, calculate goodwill according to the capitalization of average profit method. So in this question, the actual average profit is given, that is rupees 72,000. The normal rate of return is 10%. Assets are valued at rupees 9,70,000 and the liabilities amounts to rupees 4 lakh. So first, what we will do is we will calculate the capitalized value of average profit. So, and the formula is average profits multiplied by 100 upon normal rate of return. So average profit, we know it is 72,000 multiplied by 100 divided by normal rate of return, which is given in question as 10. So the capitalized value of average profit is 7,20,000. Now we will calculate the capital employed. And to find out capital employed, we deduct the value of liabilities from assets. That is 9,70,000 minus 4 lakhs. So the resulting value is 5,70,000. So the value of capital employed is 5,70,000. Next, what we will do is to calculate the goodwill, we will deduct the value of net assets from the capitalized value of average profits. So the capitalized value of average profits is rupees 7,20,000 and the value of net assets is 5,70,000. So the value of goodwill will be 1,50,000. Now, the last one, capitalization of super profit method. In this method, first of all, we calculate the super profits and then we assess the capital needed for earning such super profits on the basis of normal rate of return. Such capital is actually the amount of goodwill. And the formula for calculation is goodwill is equal to super profit multiplied by 100 divided by normal rate of return. If we talk about steps, first we calculate the value of capital employed by deducting the liabilities from the assets. Then we calculate the super profit by deducting the normal profit from the average profit. And finally, we calculate the amount of goodwill by multiplying the super profit by 100 and dividing it by normal rate of return. So here we have used the same example or the same numbers where the actual average profit is 72,000. Normal rate of return is 10% and assets are valued at 9,70,000, where liabilities amount to rupees 4 lakh. So first of all, we will calculate the capital employed by deducting the value of liabilities from assets. So the amount of capital employed is 5,70,000. Next, we calculate the super profit, that is average profit minus normal profit. So the average profit is given in question, that is 72,000, and 57,000 is the normal profit, which is 10% of 5,70,000, because we know that the normal rate of return in this industry is 10%. So if you have invested 5,70,000, you can expect a return of 57,000. So when we deduct 57,000 from 72,000, we get 15,000 as the super profit. Now, in the final step, what we will do is to calculate the amount of goodwill, we will multiply the super profit by 100 and will divide it by normal rate of return. So the super profit is 15,000 multiplied by 100, and we will divide it by 10 because the normal rate of return in this industry is 10%, which is given in the question. So the value of goodwill will be 1,50,000. So that's all for this session. Hope you liked the video. If you liked it, please press the like button. If still you have not subscribed to our channel, please click on subscribe button and also click on the bell icon so that you get notified as soon as we upload a new video. And yes, please do share it with your friends and classmates. Till we meet next, thank you very much. And if you have any questions or any doubts, feel free to write us at connecttoletsmaster@gmail.com. Till we meet next, till then, thanks and happy learning.